Hello everyone, welcome to our channel JAIIB Simplified. Today we will discuss about Unit 3 of AFM paper. In this video, we will discuss about how to analyze a transaction and how to apply debit and credit rules, which accounts will affect the transaction, what is the purpose of journal entry, why we made it first, and later ledger entries, how to prepare cash book, and significance of balance of ledger accounts. Okay, first of all we will talk about double entry system. This is the backbone of modern accounting. Every transaction has two accounts. One account will debited and another account will credit. Suppose if you want to transfer 1000 rupees for some person from other person account. Suppose if you want to transfer 1000 rupees from A to B, first account will be debited 1000 rupees from A. Next it will credited to B account. Okay, A account will debit by 1000 rupees and B account will credit 1000 rupees. Okay, this ensures accuracy and completeness. Why double entry system is important? Because of this double entry system only we can able to track assets of a company, liabilities and profit and loss of a particular year and soundness of a company. All this we can track with help of double journal. The journal is the primary record of transaction. Every entry is written chronological order. It shows debit and credit of a transaction with a clear narration, and it will explain about the nature of the transaction. While journal captures everything, so finding the balance of specific account at that particular time is very important due to multiple entries. This is the main limitation. What is the limitation? Difficult to track individual accounts. So the solution for this is transfer to ledger. There are numerous number of transactions exist in journal. That's why we transfer entries into ledger, where accounts are classified and summarized. In ledger, accounts will classified depends on nature of accounts. Okay, now you will clearly understand the difference between journal and ledger. Journal and ledger both will complement each other in kind of nature. Journal records the transaction first, while ledger organizing them analytically. Recording the journal is called journalizing. Transferring to the ledger is called posting. You can expect a bit from the here. Transferring to the ledger is called posting. The process is called posting. Transferring into ledger is called posting. Though the journal is more reliable, the ledger provides clarity by grouping transaction account wise. In case of reliability, journal is more reliable compared to ledger, but ledger gives a clarity by grouping the transaction in account wise. Now coming to the topic, cash book. It records all cash receipts and payments, whatever may be the entity. It is a bank or any company, whatever it may be. The cash book is very unique. It acts as both original entry and ledger entry. Okay, whenever you receive the cash, you record it on debit side. Whenever you give the payment to the customer, you can make it entry at credit side. Okay, suppose when customer came to deposit, suppose one customer name is A, he came to bank to deposit some 5,000 rupees. We will take cash from A and we will directly credit it to the A account. But the internal mechanism is, first the system will debit from our BGL of 5,000 rupees. Later it will credit it to A account. Likewise, if one customer B came to withdraw some 2,000 rupees, it will debit B account of 2,000 rupees, then it will credit to our bank BGL. This is internal mechanism. Okay, so in how the cash book works, all cash receipts are recorded on debit side and all payments are recorded on credit side. Now let's see about accounting cycle. Every accounting concept is like a cycle. First, transactions are recording in a journal. Next, all they classified into ledger based on the nature of the transactions. Finally, we summarize everything into a trial balance and final accounts to determine the profit or loss of a company. Now we will talk about balancing of accounts. Balancing of account means ensuring both sides tally. A debit balance usually represents assets or expenses. Debit balance in account means either we have created an asset or we made expenditure more than the incurred income, while credit balance indicates liability or income. At the year end, balances of nominal accounts are transferred to profit and loss account. Now this is very important concept. Accounts are basically classified into three types. One, personal accounts, two, real account, three, nominal accounts. Depends on nature. Okay, personal account deals with either individual or any entities. Real account deals with tangible and intangible items, and nominal account deals with expenses and losses and income and gains. This classification is very crucial for applying debit and credit rules correctly. If we classify any account wrongly, then it will affect the entire balance sheet. Rules of debit and credit. These are all called golden rules. Very important for exam. You can expect one single bit from each shift. For personal accounts, we will debit the receiver and credit the giver. For personal accounts, we will debit the receiver account and credit the giver account. For real accounts, debit what comes in, credit what goes out. Don't confuse For real accounts, you will debit what comes in and credit what goes out. For nominal account, debit expenses and losses and credit income and gains. For nominal accounts, debit the expenses, losses and credit incomes and gains. These rules ensures every transaction is recorded accurately. This is very important topic for. Let's see this example for better understanding. For a loan transaction, if a person A give loans to B, then what will happen? Debit the receiver. Receiver account will be debited and giver account will be credited. Okay. Like this, for sale of goods. Suppose one person name is A, he is selling goods to some other person B. In this situation, what will happen? Buyer account will be debited. Debit the buyer and credit the seller. Credit the seller. Okay. Same will happen in case of withdrawal from bank. Customer account will debited and the bank account is credited. Like I said, it will reflect in BGLs. Okay. If you like this video, please subscribe to our channel JAIIB Simplified.